This is No Operating Manual, a podcast about building healthcare companies when there's no one clear path and no operations manual. Today, I'm talking with Mary Grove, managing partner at Bread and Butter Ventures, an early-stage VC firm based in Minneapolis, investing in digital health, enterprise SaaS, and food tech. Mary spent 14 years at Google, starting on the IPO team and eventually founding Google for Startups before leaving to bet on the Midwest. In 2020, she co-founded Bread and Butter, which now has backed more than 80 companies and closed a $40 million fund last year. I have been looking forward to this conversation. Mary, welcome to No Operating Manual.
Thank you so much, Erin. It's wonderful to be with you.
You are the first VC of healthcare startups to be on the podcast.
Oh, that's
Yeah, surprise. Lucky you. I'd like to start with your background. Can you walk us through your career and share where venture became a part of it?
Yes. I've been so fortunate to get to work with, in the tech industry and really with startups for the last 2+ decades now. My career began, chapter one was the technology chapter. And so I started my career at Google, which, for me, I thought I was going to go there for 1 year on the way to law school. And I ended up staying for 14 incredible years, such a chapter of learning and growth. And I feel so fortunate for that. But I started at Google in 2004. And so I was staffed as a legal assistant on the IPO deal team, which was an incredible way to get to know the business very quickly. And so I completely fell in love with what was happening with the mission of Google, but what was happening on the product business side as well. And I was lucky to move over in my second year and be part of a team called New Business Development. And so we were incubating early stage product partnerships, doing a lot of emerging market work, emerging market expansion, working on go-to-market. And I mentioned that because operationally, I really love to spend time with companies in that space after we invest. And then in my last about 7 years at Google, I had a chance to really pull together a lot of the work that we had been doing around how do we support the next generation, right? Google began as a startup in a garage. What about the next generation of Google's companies being launched, scaling, using the internet? And so I got to build a team that is today called Google for Startups. And it was really looking at how do we leverage Google's technology, talent, our resources to empower that next generation through investing, through accelerator programs, through launching literal physical campuses for startups internationally. So just this whole chapter of entrepreneurship just bled through and through. And I should back up and say, my parents were scrappy immigrant entrepreneurs who both came separately from Thailand, met in the US, had my siblings and I, and, we just really were lucky to grow up in that. So that was chapter one, the kind of inspiration chapter. And chapter two was focusing on that mission of working with startups and helping them grow, but through the venture side. So that's where I've been spending the last, 8 years and growing. Now I'm really getting to invest early stage. So when I left Google, I got to join Steve Case's team at Revolution and help, as an early investment partner on the Rise of the Rest, the seed fund there. And the seed fund, as the name would imply, is about democratizing access to capital in more places, to venture capital. And so was fortunate to help build out a lot of our healthcare, fintech, enterprise, SaaS, future work investing. And as part of that, I moved geographically. My family and I moved from Silicon Valley to Minneapolis, where I live now. And I just got to know the new home community and fell in love with this place. But equally important, I think the opportunity set of what we're building at Bread and Butter is informed by this thesis of what if we leverage the Minnesota backbone of the immense density of large enterprises based here to build a venture capital firm that invests coast to coast, that leverages what is uniquely ours, which is our backyard. And so we can talk a lot more about that, but that's how we got our genesis in really focusing on healthcare, on the food system, and on the future of supply chain and work, because those backbone sectors of the modern economy shine so brightly here in the Midwest and generally, but also specifically in Minnesota.
So your experience at Google truly changed your trajectory in terms of your career. Did you go to law school? Did you do that? Did you do that route as well as no?
No, I didn't. I have so much respect and love working with the lawyers I work with, but I really just became interested and passionate about the business side and specifically technology as a lever for economic development, something I'm still really passionate about and thinking about the entrepreneurship as that backbone for building, for driving economic growth. So I stayed. I didn't leave. And even the decision to leave Google when I left in 2018 and moved to Minnesota, that was a really hard decision because I had so many chapters of growth and learning, and even met my husband at Google, right? And so it has given me so much. And I do draw from that experience and from that community of alumni and partners that we work with along the way, for sure.
That's amazing. So you touched on this a bit. So Bread and Butter was launched in 2020, and you have a really unique approach to ecosystem building through what you call your innovation circle. Can you explain to folks what that is and how it impacts how you work and how it impacts your portfolio companies?
Yes. And I think to give you a little bit of our origin story of what the 2020 kind of origin is, it's a story of partnership too, which I've always been a big believer, right? That, 1 + 1 can equal 3. So the origin story of Bread and Butter. So we're a 4-person team, 2 general partners, my partner, Brett Roll, and I. And our story is we partnered together in 2020. Brett is a super deep expert in food tech, and he, 3-time founder. He built and ran the Techstars Farm to Fork food tech accelerator. And on the side, he had his own, just a solo GP fund on his own, investing in primarily through his food tech lens. And so he was halfway through his second fund in that series, his solo GP fund series. And this is when we decided to partner. I was thinking about, going local, if you will, and doing something rooted here. And so when we partnered in 2020, we rebranded his solo GP firm to be called Bread and Butter Ventures, kept the food tech thesis, which he leads, added digital health, which I lead, and then added enterprise tech as our third vertical, which we both invest in. And so the thesis, as I describe it today, really came to light then, and our full-time team came together then. But we all collectively inherit, looking after the portfolio from inception, from that initial solo GP Fund 1 until now. And so I mentioned that too, because I think the power of partnerships of all types are so meaningful. And the thesis that we became obsessed with, enamored with, was we're sitting in Minnesota, which if you haven't spent a lot of time here, you might not know, because I certainly didn't before moving here. Minnesota is home to the highest concentration of Fortune 500 companies per capita in the nation. It is home to some of the largest logos you've know of globally, right? From Ecolab, Cargill, General Mills, Hormel, Mayo Clinic, Medtronic, 3M, Securian, CHS, CH Robinson, all headquartered here. And so our thesis was, wow, nobody is leveraging this enterprise backbone at scale from a venture perspective at the early stage. And our thesis is these titans of industry are hungry to work with the emerging tech, but there's no flywheel that's been created today. And what if we could be that conduit? So we went out and had about a dozen conversations with these large enterprises. And with my corporate innovation background, I equally love working with early stage and with large enterprises. And I think that there's so much opportunity for magic there. So we went and had about a dozen conversations, got really great feedback that there's a there. And so I thought, okay, let's build a fun thesis around this Minnesota home field advantage, we call it, raise capital from coast to coast, invest in companies coast to coast. However, leverage this unique front door into industry to accelerate go to market. So we launched this Bread and Butter Innovation Circle is what we call it. And it's a partnership. It's an umbrella that includes 20 big enterprise logos, including many of the ones that I just shared. And it's a commitment to work directly with Bread and Butter, but also with one another in pursuit of doing more with early stage. And I can tell you, Erin, the outcomes have been phenomenal in terms of how we work with the enterprises. Some of them are investors, and not all of them are. You certainly don't have to be part of Innovation Circle, but all of them do help us think about getting, top-down insights from industry, marry that with bottoms-up insights of what being from 2,500 deals a year top of funnel, diligent support on the front end before we invest. Most important bucket is commercial introductions for biz dev and real, sales commercial opportunities. And then lastly, creating a pipeline for co-investing for M&A. And how do we create that flywheel and help more Fortune 500 companies be created and ultimately be sustained? So it's been so wonderful and meaningful to be a part of that work. And it's just really the heart of our thesis and what I hope and believe, differentiates.
I absolutely think it differentiates. I'm curious where you start when you're looking at those Fortune 500 partnerships. Like, where do you start those conversations? Do some of these companies already have this type of perspective in place? Or is this a new type of partnership that you're bringing to them?
I'd say it varies quite wildly by company, but the structure that we found works best is we do engage and ultimately find and get a C-suite executive kind of sponsor to kind of bless the collaboration, the partnership, if you will. And that's really important. And then from there, we have multiple liaison teams, different teams across an organization, depending on the company again, who plug in with us day to day. And those are the kind of sending leads back and forth, vetting. And it, depending on the team, it's often somebody, an innovation team, a corp dev team, a business unit leader, chief AI officer, chief compliance officer, chief growth officer. It really varies, but we have so much overlap. If you think about, a company like 3M or Target, or the collaboration that we've done on the healthcare side with the health systems in town has been phenomenal. One example, just a more recent one of corporation and industry collaboration, our most recent healthcare investment we made earlier this year is a really compelling company based in Minnesota called Q Rounds. And Q Rounds has built a communication platform that does two things. One, it optimizes the queue for physician rounds in inpatient hospital rounds to make that flow more efficiently. And two, it, in a way that has never been done before, provides time transparency to families and loved ones at the bedside of where are you in the queue? Can you RSVP to join in person? If you can't, can you join virtually? Can it patch you in with real-time language support? And really democratizing access to who has access to the bedside. And so we first met that company, the founder is Dr. Michael Pitt. Mike's amazing. We met him when it was an earlier stage than Bread and Butter Invest, and kept in touch. But about 2 years in, we got, reconnected through our partners at Fairview Health System here. And they said, we've been deployed now with Q Rounds for over 2 years. The data's really compelling. They're going to be raising capital. You should maybe take a look again. And we did, and we were blown away. And we ended up leading their seed round earlier this year. So, referrals back and forth in both directions, but just as an example of the commercial validation, the feedback, the tangible feedback. And I would say one thing that I would share, I've been so amazed by, these are very, very, very large companies, enterprises. They're working with very, very, very early stage companies. So it's never too early to make an introduction, to have a conversation and try to build that relationship.
That's a great story. You currently have about 80 investments under your belt. How does that break down by sector?
We just closed number 85, and we just gave a term sheet to lead the round of hopefully number 86. It's pretty organic. We have our three verticals. So food tech, which is really the technology stack of the global food supply chain. We have digital health, which is thinking about technology that democratizes access to quality care for all, primarily B2B software, tech-enabled care delivery. And then enterprise tech is quite broad, B2B tech in general. And why that? Because we, again, have access to this amazing enterprise network, right? So B2B tech, we don't have a quota in terms of, needs to be a third. But I would say pretty organically, it has been, certainly over the past, since we set the new strategy. So over the past, 2 to 3 funds, pretty consistently, even I'd have to go count, but I'd say we are laser focused on those three, but those three are billion or trillion dollar industries.
Does your investment approach change based on the sector? Do you measure things a little bit differently?
We don't, in terms of yes and no, right? So the yes is, or the no is that we have a kind of consistent rubric that we apply when we evaluate investments, which is, super excited about the team. Team is paramount. And especially if we invest in teams of all types, our strong preference is for multi-founder teams where you have different perspectives, experience, skill sets out the gate is kind of a dream formula for us. And then we look heavily, of course, at product, at tech defensibility. We look at market timing. But a really big thing that I don't think gets talked about as much is we do look super specifically, is Bread and Butter uniquely equipped to be useful after we invest? Because this is coming in at seed stage. This is likely a 10-year relationship. And if it's just capital, that is a commodity. And so honestly, Erin, we have passed on opportunities that checked a lot of other really exciting boxes, but we're just not deep in that space for whatever reason. We're not going to be super useful. And so that's a big one. So that all remains the same. Where we have variation is, yes, by sector in terms of what type of revenue, what's the lead time on the go-to-market. For example, in healthcare, we're B2B investors. So we're investing in tech that typically is sold into health systems, health plans, provider networks, B2B cycles that we know can be 12 months, 18 months, maybe 24 months. We have to have high conviction in the team and the product, but also high level of patience that, okay, it's month 9 and there's no revenue, and that's okay. But if it's a pure enterprise software play, that where the barrier to launch and go live is much quicker. We're likely investing post-revenue, modest revenue, but revenue is live at the time of investment. So a lot of variation. If it's a food tech company, if it's a biotech company within food tech, for example, could be years to revenue as well. So I think applying that lens, but the baseline foundation is the same.
So you've built this ecosystem within Minnesota and Minneapolis, but you are having and investing in companies outside of the state. Do you have partner conversations with orgs outside of the state as well?
Definitely. Oh, absolutely. And I think for us, the Minnesota piece it's really our backyard. It's our thesis. It's how we hope to be competitive and winning deals. It's how we hope to support the portfolio in outsized ways. But really, we're building a national and really global platform ultimately in terms of where these companies will go, who their customers will be. This is not a localized effort by any means, but so we are constantly building a couple things. One is a really broad co-investor network. So we have today about 600 firms in our co-investor network, other venture funds, either at our stage or more likely later stage than we are, because we want to be your partner for that capital journey and make sure we can make the right introduction to your Series A lead investor, your Series B lead investor, and go coast to coast. That's one. And the other is absolutely on the biz dev side, building out relationships. We would love to know, right? It would be a dream to know every health system nationally, but we can definitely concentrate and start in our market too.
Got it. So speaking of investment and raising funds, especially from those partners, talk about how you raise money for each of those funds.
The business model of ventures, it's very interesting. And I have really enjoyed, I have to say, I've really enjoyed that side of the work. I think being a fund manager, it's maybe more readily apparent, the business of sourcing great companies, evaluating, investing, supporting the startup facing side. What we sometimes don't talk about as much as the whole other side of the business, which is how do we raise capital? How are we benchmarked, right? What is our business model and how does that all kind of tie together? So with us, we're raising, and our last two funds have been institutionally backed. So we're raising capital, right? A pool of capital for a 10-year fund life. And that's a pool of capital from a mix of institutional investors that include corporations, foundations, fund of funds, family offices. They include also a whole lot of phenomenal individuals who are investing in the fund personally. So we raise this pool of capital. It's a 10-year fund life. So we commit to invest, steward, support those companies for the duration. And we're also setting the expectation that, we plan to return your capital investor within that 10-year time frame, maybe plus a year or two, but that's the time frame. And so I think it's important to remember that venture has its own business model. And so if we aren't successfully executing and successfully returning capital, we're not going to be able to be successful in raising subsequent funds. So with our current structure, 10-year fund life, we've got about a 6-year investment period. That includes first checks that you're putting in building the portfolio over the first 3.5 years. The remainder of that 2.5 years to get to 6 years, you're deploying follow-on checks into highest performing companies. And the rest of that time, you are supporting that company with all your might, but no additional capital. And then you need to start seeing those returns come in. And so as a fund manager, then we're typically going out to market to raise a new fund roughly every 3 to 4 years. And you start to stack them on top of each other. And, you graduate the earlier companies from the more acute support through to exit, and you add a new crop. So it's incredibly fun. It's incredibly rewarding. I've learned a lot over the past 6 years in the specific seat. And the thing I would stress is that we have, as fund managers, we have so much empathy and appreciation for the founder experience of raising capital, because we also have to do it consistently every few years. And it's a make it or break it situation. So we very much feel the same sense of urgency and responsibility, fiduciary responsibility that I think our founders feel too.
What does that pitch look like when you're out there trying to raise funds?
I have, the 45-second version, the 15-minute version, the hour version, you name it. But no, it's the same mathematics too of what a startup might experience, right? Which is, I know if we're pitching an institutional investor to invest in Bread and Butter's fund, they're also likely seeing 3,000 seed fund decks that year, and maybe they're going to make 3 to 10 new investments. And so just like we would coach a startup to think about differentiation is probably the most important things. I get really excited on the fund side about funds that have a specialty. I think, and with ours, it's our vertical focus with the big three. It's our leveraging the corporate innovation circle. Leaning into your differentiation is key, but it's really about yes, big picture vision. What's our strategy? What differentiates us? Why our team? It sounds exactly like a startup pitch in a way, right?
It does.
What can you expect from us after we invest? Talk to some of our portfolio companies.
Switching gears, in other interviews, you've said you invest in team, product, and market traction. So tell me about why that team is such a huge emphasis for you.
That's one of my partner Brett's favorite kind of frameworks from his. And Brett, if you haven't met Brett or know of him, Brett Brill, you should check out Brett's Brain on YouTube. He created this channel with these really quick sound bites that range from, I think it's 2 to 4 minute clips, but they're super informative and entertaining about, what's a liquidation preference and why should you care? But that's one of his favorite frameworks of the team product market traction. I think for consistently across the board with us, team is 100% paramount. And I think the same, all right, when investors are looking at investing in bread and butter, who are the GPs who you're backing, the human beings that you're backing. And for us, because we're investing so early, Erin, sometimes like from a business perspective, there isn't as much business to diligence because companies are super new. And so it really becomes about this founder bet. And so you're trying to understand their big picture vision. What is their 10,000 foot view? But then what is their insane execution vision? What are kind of the both of those things? Founder market fit, we hear people talk about, right? It's why did you choose this specific problem? Why you? And to a T, if I go through our portfolio, it's rarely just a smart person chose a problem. I was driven to this by a personal experience, by somebody I love, by my previous role, by identifying a gap that I and millions or billions of other people also have. And so what's that story behind it? And then I would say coachability and self-awareness. And this by no means that a founder needs to take all of our advice, but just that openness to collaboration, to conflict. How are you going to build an organization? Are you self-aware of the areas that you're strong, and then areas where, hey, we need to build out the finance function earlier because I'm a technical founder, let's say. Or I think that all those variables, it's really a special relationship. And then it's after we invest, we're going to work together for up to 10 years. And so, it's really, is there a true partnership there where you can go the distance? And we want to be, our goal, our standard is we endeavor to be your first call that you want to make when something goes incredibly well, and your first call when something goes incredibly wrong, and to have that level of trust and vulnerability, and know that we're truly partners. While we're not operating your company, we understand we're not trying to micromanage. We want to be a real strategic, hands-on partner.
So I'm assuming you've had an experience where you've been pitched an absolutely brilliant idea that you're like, this is a win, but had to turn them down because you couldn't back the team. Tell me about what that looks like. How do you manage that because you're so excited about that product market and fit?
It's really a hard one because, and this definitely has happened, right? Where I think phrased differently, whenever we see a flag or a red flag, a yellow flag, we're looking at an opportunity. What is that flag? So if the flag is something, product feature related, or it's the business model, those things can be tweaked and adjusted relatively easily. When the flag is on team, that's where your heart kind of sinks. And it's not to say that that's not a great founder. It's the fit again with bread and butter and our team and what we're looking for. And so where that's happened, yes, it's been really, really hard. And that tends to come up through, there are some red flag signals. For example, we invest in really early stage companies. They're typically, definitely sub 10 employees, often sub 5. Sometimes it's a really small group. And then later in our process, we will invite, our whole team meets with their whole leadership team. Sometimes that's the 2 founders. Sometimes that's, 5 people. And one small flag that's an important one that's come up over time is we've noticed a correlation between when we get to that final stage where teams are meeting. I've been in meetings where, let's say the CEO has dominated the entire conversation. The whole point is to meet the rest of the management team, and they can't get a word in edgewise, or founders jumping in and just constantly cutting them off. And it's probably indicative of what the culture already is or will be internally. And that's just a very minor one specific example, but that has actually played out in our post-investment versus you can really tell the founders who are the culture creators, empowering, standing back. Of course, they have an opinion on the question that was just asked, but let the commercial leader speak to her area of expertise first. And then if I have anything to add, I can. So as an example of these flags that come up, those are the times where it's really hard. And it's hard to not just want to move forward because the product is so innovative. But those are the challenges that are the most difficult.
And I'm assuming you're giving that feedback as you're moving along, and that feedback, then how they receive that feedback is also another way that you can flag whether or not that would be a good fit for you.
There have been situations where, and it's in both directions too, right? I mean, there's situations where a team will decide not to move forward with the diligence process for whatever reason on their side too, right? Where they didn't feel a fit. So it's always a two-way street. I think that's super important, but that is really hard. And I work hard to remind myself that too, right? Of every opportunity is a learning opportunity. And if, for example, a potential LP passed on an opportunity to work with us, I would 100%, always welcome, one, try to be gracious about it, but two, try to actually ask for real feedback because it's a gift and really give it to you. It's awkward. It's uncomfortable. I would say in the passes that we receive on our side, I probably get feedback maybe 5% of the time. And I always ask for it because I genuinely, whether or not I agree with the feedback or will implement that feedback, it's really informative data. And so I think that is absolutely, and life is long, right? But you kind of will run into each other again in a different context in a few years, and how that relationship, how we parted ways is really important.
Yeah. Yeah. Especially, I feel like healthcare can be a small town sometimes where you are, running into folks that, know these folks and so on and so on. So I absolutely understand that. For you, especially in the health tech space, what makes a company an attractive investment?
I think we're in such a remarkable era of healthcare innovation. It's always a good time to build in healthcare, I believe, but particularly at this moment, at this inflection point of the rapid AI adoption, you can't have a single conversation in any day now without diving deeply into AI. I am so excited about, I really think that the applications of AI to healthcare will be the most important in our lifetime. And what's exciting about it, I also get a lot of questions about, is enterprise software then dead? Which I think no. I think building in healthcare specifically, it's highly complex, highly regulated, high stakes environment. Those are wonderful conditions for AI actually, because it's going to be measured, thoughtful, regulated activity in a way that is we're accountable for it. So I feel good about that. So in terms of what we're looking for, we say that our North Star mission statement we look at internally for healthcare is, we want to invest in technology that democratizes access to quality care for all, show something very broad on purpose. And so that includes everything from, we're B2B investors primarily. So software, tech-enabled care, fintech, insurtech solutions that sell B2B. So into primarily health systems, health plans, provider networks, could be employers. We're less on the direct-to-consumer side. And why? Because of the enterprise backbone that I mentioned that is core to our thesis, is that's where we think we can add the most value. So we're looking at a lot of tech on the kind of the front end operational, think of it as the plumbing layer, right? Of things that can drive operational efficiency, leveraging, agentic AI for the administrative dashboard of healthcare, lowering costs, allowing clinicians to operate at the top of their license by streamlining some of the administrative work that is currently manual. And then we look at the inputs of technology for clinical decision support and just the input on the developing a care plan, monitoring, and really helping augment that. And then we think about innovation around the technology delivery, care delivery itself. And we have a ton of investments across all of these that I think are really revolutionizing in a super fast way. And then another area that I would love to be spending a lot more time is fintech, insure payments layer, both payments themselves, but also payment models, reimbursement models. What's coming next as we think about the economics of healthcare? Extremely challenging, right? Rising costs, lower reimbursement rates, more Americans being insured by federal payers. There's just a lot going on, right? And so it's how do we time an investment too in healthcare?
You're going to get a lot of folks after this saying, "Hey, I'm an RCM company." They seem to be popping up left and right. So
we have some really, really, I mean, there's so much innovation. One I'll just mention is a company based in San Diego called WellBe Health, which is, really an expert in that remote patient monitoring, chronic care management for the Medicare population, specifically the senior population, working directly with provider networks and health systems to extend their care and leverage technology. And it's just amazing to see these challenges have existed for decades, but I feel like the pace of tech innovation and adoption and the data that comes from it, it's wild.
It is. It really is. You're working, or your Bread and Butter's working on a Venture 101 series for high school and college students. It's interesting to me, Gen Z tends to see VC or, investment value as a value extraction a little bit differently than previous generations. So
I was excited to hear what you're going to say. I'm like, I actually don't know what Gen Z thinks about venture.
it's just a different, again, you see,
You mean like more of a
pushback
skepticism?
by college students to AI, right? Like how is that extracting value from them and their lives? I guess my question is how does that shift work and how you teach or frame that conversation now versus maybe even 5 years ago?
It's a great question. I'm excited about this year's session. So the context for Venture 101 is we always get such a incredible pool of students who just reach out to us organically, and they do a lot of research and have just awesome outreach asking about internships, summer internships at Bread and Butter. And we have a formal internship program in partnership with the University of Minnesota, where we actually have a student from their venture capital team there in bed with us for the whole year. And so we have a student who, a bit more intensive hours in the summer, but throughout the year they're with us. And so it's a really, really cool experience. But long story short, we're a small team. We're not able to take a large number of interns, but we did want to provide some more scaled way to be accessible to people. In addition to, we have open office hours weekly. So if you're tuning in and want to connect one-on-one with anyone from our team, you could book with specific partners on our website, breadandbutterventures.com. But beyond that, we wanted to do something specific to students. And so we started this. I think this will be our 4th year. And it's just a simple, free virtual session. I think the first year we had students from 80 different schools join, which was really exciting. And, it's just trying to just demystify venture capital a little bit. And to be honest, that the agenda, and we put the materials together closer to the actual date because we source questions when you register of what are, I think now we put it out a few days ago. We have 100 responses in the first few days, and we started to aggregate those questions by theme, and we can build out the program based on that. But I think the goal is just really to understand, one, what is venture capital? When is that the right path for a company to capitalize? 2, what actually are the mechanics of venture? What's the business model? What's the math on it? And then 3, which I think has been a topic of interest, is what does a career path look like in venture? And that's where it's shifted a lot over the past several years too, where there's no linear path into venture, I think, but we can kind of speak to a few different paths that we've seen. But I'm excited for it. And I appreciate you saying that, because I have not, maybe I'm showing my age, but I haven't been feeling the pulse of that sentiment yet, because it hasn't really come across our radar as much. What I would say in response to that is venture is such a specific form of capitalization for a specific type of company on a specific growth trajectory who has an exit in mind within a certain time frame. And that actually ends up being a pretty small end number of companies relative to all companies being created. And so for those, this is a great path that makes a ton of sense. And for investors to, as a part of a balanced portfolio, I think there's absolutely the slice that I would advocate be venture. But like anything, eyes wide open. But I could share just the human level of the sincerity of the people behind these jobs who are not doing it for. There are a lot. Let me put it this way: there are a lot of other ways to earn a good living too. This is it's a really rewarding, but not a guarantee, right? Venture is risky,
Yeah.
and so
Yeah,
I think that I would say working with dozens and hundreds of other fund managers at this point, it's a specific vocation, and these are optimists who are betting on the future and the people who are going to help create that. And so I feel solid about it, and it's an excellent, addition to an overall investment portfolio.
I think anybody who's watching this interview will see that your sentiment is matching, how you approach, not that value extraction that sometimes gets pointed out. So wrapping this up, for healthcare founders that are listening, what's your best advice? How do they get on Bread and Butter's radar?
On Bread and Butter's radar specifically, I would say, we love opportunities. So we invest at seed stage as our entry point, which typically means product live in market for multiple quarters and have some utilization engagement data under belt, sometimes early revenue, sometimes not. Reach out to us. We have open office hours if you actually want to meet fit live. We also accept inbound submissions on our site to hello@breadandbutterventures.com. We look through all of them. We try to make sure that a lot of them are not, at our stage. But we love meeting companies pre-seed and seed, I would say, because often we can get to know somebody over the course of a year from pre-seed to seed, and maybe, it's not such a rush. Our round is closing right now, but I think healthcare founders in general building, I would say, it's a really exciting time. It's still a tight capital market too. So my two biggest pieces of advice with respect to fundraising in general is one, this is still the time to maintain extreme discipline on capital efficiency and build and control that immediate destiny as much as you can. This is advice I'd have for across our portfolio as well. And then two is from a fundraising perspective, while it's important to cast the net wide, and these days with AI tools too, there's so much research you can do up front to try to qualify and target your raise and try to make sure you're finding the investors who are underwriting the type of business you're building, that business model, that gross margin profile, right? Because I think that sometimes we spend a lot of cycles, based on my own experience, pitching to the wrong investors for healthcare. So I think just figuring out the who could save a lot of time.
But Mary, thank you so much for your time and for your wisdom. I look forward to seeing what else comes out of Bread and Butter.
Thank you so much, Erin. I'm a big fan of your show and just appreciate the opportunity to be with you.
Thanks for listening to No Operating Manual. If you enjoyed this episode and you'd like to support the podcast, please leave a rating and a review, and don't forget to subscribe on YouTube. No Operating Manual is hosted and produced by Erin O'Brien of Chemistry, a healthcare marketing and communication advisory. Visit our website at choosechemistry.com.